I'm betting on at least $200 an ounce, but we could see a spike that goes up toward quadruple digits.
And in a structural shift in the metals markets, backwardation in both silver and gold is telling the world that the physical metal today is worth more than a promise in the future. Physical. Because what do we know? We know if you don't hold it, you don't own it. Physical gold is unprogrammable, untrackable, and undeniably real as it's used in every single sector of the global economy.
Precious metals experts Mike Maloney and Lynette Zang deliver a striking warning about what may be unfolding in the gold and silver markets right now. Their latest insights point to a structural shift that many investors still haven't recognized. A shift that could ignite one of the most dramatic moves in precious metals history. One of the biggest signals they highlight is the growing backwardation in both gold and silver. This rare condition means physical metal today is now valued more highly than future contracts, suggesting deep stress in the supply chain and waning trust in paper promises. When the spot market begins to prioritize immediate delivery, it often indicates the early stages of a major market repricing. Silver, they argue, may be on the edge of a powerful breakout, with long-term targets pointing toward $200 an ounce or higher, and even the potential for a temporary spike approaching four-digit territory if conditions tighten further. Gold follows the same pattern: physical, unprogrammable, and essential across global industries. The message is clear: the real market is waking up, and physical ownership is becoming more critical than ever. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now listen to the interview.
If it had the same percentage growth as the Wilshire 5000 stock market index, it would be $2,178 per ounce. But the average of the consumer price index, median price home, Wilshire 5000, the 10-year Treasury bond, U.S. GDP, and currency in circulation, and the M2 currency supply growth was $921 an ounce. So I don't think this 661 that this chart is pointing towards as an echo. This is like history repeating. It's an echo from the past. I don't know if even at 150 or $200 an ounce, if silver is going to catch up with demand over the. I mean, you look at the AI infrastructure that's being built out and the demand that silver will have on it for all of this tech. And at the same time, people are rushing back to it for investment. And when you invest in something like Silver Eagles, you're taking silver off the market permanently. Nobody's going to melt down Silver Eagles to put into electronics. The premium on them is too high. They know about the gold-silver ratio. They know that silver is incredibly undervalued. They have been accumulating gold. And, one of my strategies has been to accumulate silver now, and then at certain gold-silver ratios, I'm going to be turning some of that silver into gold. I think a lot of the central banks will be looking around, trying to accumulate more gold, knowing that there is a problem coming with fiat currencies and just the monetary system in general, the markets and so on. And the best way to get ahead of the curve is to try and get as much gold as possible. But with gold already up at the prices that it's up at, they're looking at that thinking that, even though it's at record highs pretty much, they're looking at that thinking that that's a high, where silver is still basically at its 1980 high today, which just doesn't make any sense at all.
Physical gold is unprogrammable, untrackable, and undeniably real as it's used in every single sector of the global economy. Gold and silver are the foundation, yes, but frankly, they're just the beginning. We help individuals build sovereignty through tangible assets because you need to create surety in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold. And you have to protect yourself from this creeping consolidation of financial control because it's here, make no mistake about it. And when the storm intensifies, and it will, I can guarantee that, those who've built their layered resilience won't just survive, they'll lead. Gold is the compass, but layered sovereignty is the map. Let's chart a course together. Before that next wave hits, take advantage of what's happening in those manipulated spot markets.
In this in-depth analysis, two of the most respected voices in precious metals research break down why silver and gold may be entering one of the most important phases in modern financial history. Their latest data comparison shows that if silver had simply matched the percentage gains of the Wilshire 5000, it would already be sitting above $2,100 per ounce. Even when averaged across major economic indicators, CPI, median home price, US GDP, currency expansion, M2 supply growth, and treasury benchmarks, silver still points toward a long-term valuation near $921 per ounce, far above today's levels. While price models offer different targets, the bigger story is the widening disconnect between physical demand and available supply. With the explosive build-out of AI infrastructure, renewable energy, and advanced electronics, silver's industrial consumption is accelerating at the same time. Investors are removing supply from circulation through high-premium coins like silver eagles. Once these coins enter private holdings, they rarely return to the market, tightening conditions even further. Gold faces similar pressures, but central banks appear more aggressively focused on accumulating it as concerns grow over the durability of fiat currencies. Even with gold at or near record highs, institutions understand it remains a foundation of long-term monetary stability. Meanwhile, silver continues to trade near levels last seen in 1980, a distortion that many believe cannot hold. This moment is about more than precious metals. It's about building layered sovereignty. Silver for barterability, gold for preservation. As financial control systems consolidate, those who prepare now will be positioned not just to endure the next wave, but to lead through it. Let's get into the interview.
And across Asia and the Middle East, retail investors are chasing gold's time-honored safety and value. Faith in fiat currencies is fraying. Central banks are accumulating. Exchange-traded funds are swelling, and then not to control the visible price. And the rally is being fueled by expectations that the U.S. Federal Reserve will cut interest rates further. Woohoo! More of this, isn't that great? But what that does is it weakens the dollar. And it really, frankly, amplifies gold's appeal because that creates inflation. This isn't just a hedge anymore. It's a global flight to safety. Gold has become the asset of last resort, the only true asset of last resort. And not just for institutions, but for families, communities, and sovereign nations. You need to become your own sovereign nation and build that sound money strategy. It's the one thing people trust when everything else feels, a little manipulated, inflated, or vulnerable to digital control.
Silver is an incredibly important metal, and China is a major supplier, and that means that they can squeeze all of the tech. All of the AI infrastructure that's going in, all of the solar and batteries and things to power electric vehicles and so on. This all requires silver. And if the West is using more than it produces, and the world is using a whole lot more than we produce, stockpiles are getting low, and then China can put a squeeze on us. And this is part of the posturing and the battle that was triggered with the Trump tariffs.
In this urgent global metals update, experts warn that gold and silver are no longer just alternative assets. They are becoming essential pillars of financial defense. Across Asia and the Middle East, retail buyers are accelerating purchases of physical gold as confidence in fiat currencies continues to erode. Central banks are quietly expanding their reserves, ETFs are swelling, and expectations of further U.S. interest rate cuts are weakening the dollar. all while strengthening gold's appeal as real, unmanipulated value. This movement is not speculative. It's a worldwide flight to safety driven by inflation risk, geopolitical tension, and growing distrust in digital monetary systems. Gold has reemerged as the asset of last resort, not only for nations and institutions, but for everyday people looking to protect their families from financial volatility. Silver, meanwhile, is becoming a choke point in the global technology race. China remains a dominant supplier, giving it leverage over the West's accelerating demand for AI components, solar technology, batteries, and EV production. With global silver consumption far outpacing mining output, stockpiles are shrinking, and China's ability to restrict supply adds a powerful geopolitical pressure point. This unfolding dynamic signals a major shift in global power, trade, and monetary stability. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.